Thank you very much. So we're in Caesar's Palace. I guess it's only fitting that I dust off my middle school Latin. Originally, Mark Gabelli was supposed to give this presentation, so if you're a Roman Catholic or familiar with it, they have the phrase in corpo Christi, which means in place of Christ. Your babysitter, when she has authority, it's in loco parenti, so I am in loco Gabelli. Which some people might say I'm in loco Gabelli just having worked there for 10 years. But a little bit of a background about myself. I've been with Gabelli 10 years. I'm a senior vice president in alternatives. So thank you for having me to talk about microcaps. So moving on from middle school Latin to middle school chemistry. I'm going to talk about the alchemy and the markets. So alchemy is the medieval forerunner of chemistry, but it's really this idea of taking base metals and turning it into gold. It was something they tried to do. Inevitably, we know that doesn't really work, but maybe you can catch lightning in a bottle. So alchemy is the process of transforming through creation and combination. Again, they did this to try to create gold, but in microcaps, there really is real opportunity to possibly create gold. For example, look at these mad scientists. They were hippies out in California, putting their science together to try to find a new way of computing and building computing power. As we know today, this wasn't today, this is 12 years ago, but today their company is worth $3 trillion, and that's about 1/3 of the value of the world's gold. So these guys found it. It's alchemy in real life. And that could be found in microcaps today. So what's the ingredient mix? How do you do this? Up here, you can see a bunch of different things, but they all really need to come together. Capital raising is one of the largest challenges. If you speak with most of the companies over there next door, they're actively raising, looking to raise capital and deploy it. You need business management, strong leadership, people that are knowledgeable in their areas. They need to rely on legal and governance. Thankfully, most of the sponsors here are legal and governance, can help with that. Marketing and sales, margins, new products, managing costs. You put this together along with the right timing, and you actually might catch lightning in a bottle, and that's the alchemy for microcaps. So that's my presentation. Moving on, introducing Gabelli in microcaps. Then we'll tour the industry and the microcap space, and then why we care. So Gabelli's been around. We started in 1977, investing in 1977. That's 40 years of investment history. We had managed accounts in the 70s. We launched a small cap growth fund in the 90s, the early 90s. And then we launched a microcap fund, the Teton Westwood Mighty Mites fund in the late 90s. In 2010s, we launched our trust, closed-end fund, Gabelli Small and Mid-Cap Value Trust. And then in the last decade, we launched the Mini Mites Fund in 2018. So we've been investing across all different type of structures for our clients. If there's a structure that you'd like, we likely have it or are willing to work with you to customize. So here's 6 different areas that makes our investing in microcap unique and distinct. Focusing on the first, we have access to global relationships across multiple sectors. As I mentioned before, our firm was founded in the 70s by Mario Gabelli, world-renowned value investor. And we have a global presence. So our offices are based in Westchester, New York. I'm based out of Greenwich, Connecticut. But we have offices in Milan, London, Tokyo, Shanghai, Hong Kong. They focus across all market caps, including microcaps. And we'll talk about the opportunities that you could see globally. But it's important in today's market, the opportunities are not only here in the US, they are abroad, and we have those relationships. We manage about $35 billion in assets, and $3.5 billion of that, about 10%, is in the small microcap space. So we leverage these extensive relationships around the world. We have a proven track record. Again, 40 years of investing. We've invested in over 100 companies that we are a 13D filer on, active management, and our annualized return is about 16% over those 45 years that we've been managing money. So we do that on the public side, but we also invest on the private side. We put over $3 billion of capital to work in direct investments, and we've acquired or had full control of over 40 companies in our history. We built a platform. Again, that global nature, we look for small cap, micro cap companies that maybe don't have relationships abroad across the pond, but they'd be great plugins. If you're in the aerospace and you supply to Boeing today, you could also do that to Airbus across the seas. So there's plenty of relationships that you want to be able to work with a manager that's invest with you here in the States, but also is able to carry and leverage you across globally. And we do this with our proprietary methodology. So Mario Gabelli graduated from Columbia Business School, the Graham and Dodd style of value investing, the same kind as Warren Buffett, Bill Ackman, some of these other peers in the market. So the value investing, and we do, if we think of our approach, we have 35 industry expert analysts following companies on the fundamental side. And that's what it really takes to build a diversified portfolio of microcaps that you believe are going to succeed. There's thousands out there, but you need the analysts that know the industries well and know them deep. And then the way we value these companies is considered private market value with a catalyst. That's our proprietary methodology. And what it is, it's what two individuals would agree to on a valuation of a company in a transaction. So it's a private approach in the public markets. Then we look for a margin of safety from that value. And we try to identify catalysts in the market that'll propel and narrow that value so you can realize it tangibly. Catalysts include M&A takeovers, spin-offs. There's industry catalysts, there's soft catalysts, hard catalysts. We try to identify those, and then they eventually make it into our portfolio. So this is Gabelli's approach to value investing. It's also taught across several different universities today, Columbia, Fordham University, to name a few. So to go through 5 and 6 together, again, it's about relationships and industry knowledge, so you can build a team that ultimately works to execution. So you need strong legal advice, financial advice, positions for growth, and we do that as we execute as investors for our fund, but we also do that for the companies that we invest in, the end microcaps themselves. So we deliver it to our shareholders, and we deliver it to the companies that we invest with. As I mentioned before, we're one of the largest 13D filers, so my intern loved making this. I asked him to pull 132 logos from the internet and put them on a page to show you all that we've been involved across all different sectors. Again, active filing, so you need to have more than 5% ownership in these companies in order to file. And that just means that we are able to engage, write letters, and be that type of partner that a management team would want. We do that across the market cap spectrum, whether you're the largest company or the smallest. We're active, and we're going to have dialogue with you as an investor. And again, bring those relationships and that experience to you and your team. And a benefit of investing in the microcap, small cap space, or across all these industries is these catalysts that we identify often lead to M&A takeovers. So this shows the last 10 years of companies that we've held in our portfolio that eventually were subjected to an M&A takeover. And so we have deep relationships with these management teams. Out of the 35 analysts that we have, if they each follow 50 companies, we average about 1,000 meetings with management per year. We're not just sitting back, investing and letting the stock take its ride. We're active managers getting in front of these management companies, and it leads to success for us. So alchemy in the markets, the opportunity. Why microcaps? What's happening in this space? It's not followed. We have 34 analysts that we're putting to work today. Their research is kept internally. But if you think about the street, microcaps 3.3% of the coverage, whereas large caps have 22% of analyst coverage. And the number of analysts, companies with no analysts covered, microcaps have 18.8%. It's not covered. So if you think about Apple, there's over 100 analysts that are following it, putting out their opinions, their research. It's hard to get an edge. But this is a space where if you have the experience and the expertise, you can come in and really find an edge that can lead to value creation for your shareholders. 20-year history. Microcaps have actually just outperformed small and mid-caps. The average annual return in microcaps is 13.8%. Large was 11%. And they do this because their smaller size has growth potential. It's easier for them to double and triple over the course of 3-5 years, whereas Amazon can't double in the next 3 quarters. So it has that growth potential, and it's up to you as an investor to try to find it. And we hope that you ask Gabelli to be your partner to help you find those companies. And there's a high degree of inside ownership. You want some skin in the game, and microcaps have the most skin in the game. Oftentimes, they were started by a founder, and the founder is still involved, so that you have that alignment of interests, long-term commitment. These investors can't just sell overnight. If you're the founder and you own 30% of the company, you can't liquidate that. You're in it for the long haul. There's stability because they started the company or they're in the company for a long time as management. So this is reasons why you're really tying yourself to more than just the stock. You're tying yourself to management teams, and they are making money when you make money. So it's alignment of interests and partnerships. Looking at the landscape, stocks have outperformed bonds, T-bills, and inflation over the decades, on average 10.2%. Blows everything away. So you want to be in equities. That's the space that we invest in. You might hear some people fundraising or doing fixed income. Rates are high today. We don't know where they're going to be tomorrow, but we're investing in the underlying growth of the business. We want to be equity owners. The U.S. was once the largest portion of the pie, making up more than 50%. Today it's shrunk to 45%, but that's just by nature of the other areas growing. Asia makes up 30% of the world equity market, and Europe is about 16%. And we'll look at a few of those countries a little bit more closely, in particular their involvement in microcaps and their listed microcap companies. So if you look at the U.S. versus the world, we're about 10% of the number of U.S. companies. So you might be saying, why is that? We have to make U.S. microcap great again, but that's a tongue twister. And fortunately, the U.S. does make up the largest amount of market cap of the microcaps. So 46% of that value is in the U.S., even though numerically there's less companies versus global. So there's 46.1 billion in the space in the U.S. versus almost 100 billion globally. That's trailed by China, UK as some of the noteworthy ones. We invest in in Japan and India as 2 of our favorites. But there's not much representation of small and micro cap within the OTC listed universe. So if you look at the 1 billion and above, that makes up 75% of the OTC listed market. But it's only about 100 of the 4,500 companies in the space. So it really is heavily weighted there. There is opportunity, and there's a large number of listed companies. And if you look to the right, there's even more across all of the different sheets on the OTC market. Valuations. Microcaps provide a very attractive valuation. If you think about the Russell microcap, which is the 5th one in, it offers a dividend yield that's on par with the Russell 3000, but it does this with about 1/3 of the price to book and a comparable price earnings, about a half of it, but for the Russell 3000. So you have attractive valuations at lower price to book. You're still able to earn. There's opportunities in the valuation segment. Again, globally, you have Brazil and China as the lead. Those are emerging markets, but if you like some more of the developed markets, like the UK and Japan, their discount to the US is pretty significant. The UK is about 52% of the discount of PE to the US. So think abroad, think globally. You can find a company at half the PE in the UK. You should find a manager that could help you manage that international investments. And likewise with GDP. So again, if you look at the global list of companies, out of these 56,000 companies, there's 42,000 that are below 500 million. That's 76% of all listed companies are microcap. And the US represents about 11% of that. So the world is mostly microcap. The opportunities are there. There's staggering numbers, and not all of them will succeed. So that's why it comes back to alchemy, building teams, having relationships, and the proven track record. And this is the broader list, which is too hard to read. So again, it comes down to alchemy, but some remarks. Operating a microcap business is hard and it's challenging. Most struggle with access to capital, and most of them struggle with the knowledge of the capital markets. We at Gabelli, as investors in microcaps, can help those companies. But likewise, investing in microcaps is hard and challenging. You need to conduct more work. There's thousands out there, but you need to conduct more work, more alchemy to find the winners. And you need to be able to identify catalysts that'll propel that value. We at Gabelli have been doing this for 40 years with our success and track record. So we'd love to speak with you about that and how we could help you invest in microcaps. So this concludes my slides. But now that my presentation's over, my permanent residency on the blackjack table will begin. So I hope to see you all there and happy to chat a bit further. But thank you all.